Welcome back to the channel, guys. We are back with another video, and this is going to be about money management. I have taken the liberty of creating a sheet here that we are going to look at for a good explanation of how you can manage your account balances, your money, to survive in the forex markets. So we've drawn out some examples here of different setups on our GBP USD, and we're going to see how you can manage your accounts on such entries and setups. So without wasting any time, let's jump right into the deep end. So here we are going to use an example of a $10,000 account, and we'll use an example of 5,000, 1,000, and all the way down to 500. So we are starting with a $10,000 account. So for example, we have three setups here, using GBP as an example, and let's go. For example, we had a setup where we had we have a huge range on GBP for the last enter from the beginning of August. GBP is ranging as a result from the huge downward trend that was there in July. So in August we are seeing a range forming, and we're waiting for a breakout to the upward. So within this range we have multiple entries, multiple setups. We had a lot of sell around that zone of 1.27, but right now we are looking at money management. For example, we have a setup right here where price is coming back to the demand or support zone, which is right here. Price is coming back at this point, and it is creating a downward trend, lower highs, and then we see a breakout from this trend line, a breakout to the upside. So there is a change of character, and then price comes back and creates a demand outside the trend, which becomes our key point right now in this structure. So on this date of 16th, we get an entry setup, so which is a demand into this demand setup into this demand zone, and we enter our trade right there. We try to target the previous supply, and we try to risk below the demand zone. Now this setup right here has a risk to reward ratio of 1 to 1.35. we can keep it at exact the risk, we can keep it at 1. The risk is 1, and the gains is 5.4. so this the risk is 1 and the reward is 1.154. so this means if you're into this trade, your risk will be 100 and your profit will be 154. If you risk till 2, which is right there, it means this setup right here will be a risk of 1 to 2, this setup right here. So this is the order you want to be in. But if you're entering, for example, you had to enter around this zone, and the risk had to be around there. That was the setup. So the risk, the gains, you can pull them back to 2, which is right there. So that setup has a risk to reward ratio of 1 to 2. Now if we go into the account to see how much, this is our example, a risk of 1 to 2 right here. So this, we are creating a scenario where you have a $10,000 account. So the normal lot size, the appropriate lot size, let's take it as 1 lot right there. So this means your risk of 1 to 2 will have a take profit, which is success, a take profit of 200 and a stop loss of 100. And here, if you place 10 orders and they are all hit the profit and 10 orders fail, so out of 20 orders, if you have 10 good orders and 10 bad orders, you will get 2,000 from the good orders, and you lose 1,000, and you will end up having 1,000 as, let's do this minus this, so you'll have a balance. You'll have profits of 1,000 right there. You'll have profits of 1,000. Now with this risk to reward, 10 good orders and 10 bad orders, you end up with 1,000 on a $10,000 account. Let's look at another example. For example, this becomes your demand zone, and every time you get a setup into the demand zone, you try to open a buy position. So here you open another buy position. You're putting your risks below the demand, and you're putting your gains. Let's try to make it 2. You're putting your gains a little bit around 2, so it has to be a risk of 1 to 2. We are trying to fit all the setups into this 1 to 2. So you have a second order right there that has a risk to reward of 1 to 2. Now this order, we are going to try and look at it if you have a $1,000 account. It means if you risk 1 to 2, you'll get 20 as 0.1. Okay, so you have wait 0.1. Let's increase. Okay, mm, 0.1. Okay, so if you have a $1,000 account and you place 0.1, it means right here you will have on a risk of 1 to 2, you will have your 20. Right here you will have your 20, and you will have your 10 if the order fails. Now in this scenario, this $1,000 account will end up 10 good orders and 10 bad orders. You will end up with 100. So within 20 orders you still make 100, and 100 is 10% of your entire account. Now if these orders are done within a month, which is 1 order per day, if these orders are done within a month, you make 10% of your entire capital within a month. If these orders, 20 orders, are achieved within 2 months, you make 10% every 2 months, which becomes 5% a month, which is really very good number in our field of trading. Now you have to put into consideration even the smallest account. The smallest account with a 0.1 will have 2 and 1. The smallest account of $100 with a 0.01 in lot size will make $2 on a risk of 1 to 2, and will lose $1 on a risk of 1 to 2. And 10 orders will create a profit of 20 if they are all good, and 10 orders will create a loss of 10 if they are all bad, like failed orders. They have hit your stop loss. Now in all this scenario, what do we mean by money management? We mean, let's go back to the beginning. So this is the basic. In money management, what we mean, on your $10,000 account, do not try to order 5 lots, because if you fail on the first, for example, on every order you lose 500, but you gain 1,000. If you fail 5,000, if you fail 10 orders, you lose 5,000, and if you lose 5,000, you can no longer place that lot size. If you first achieve 10 orders, you will get the 10,000, but it can be the vice versa. So if you want to manage your money correctly in forex trading, always order the appropriate lot size. So it doesn't matter what setup you have. Is it in a range? Is it a breakout? Any setup you have, it doesn't matter. Any setup you have, it doesn't matter. You always have to order the appropriate lot size. For example, let's say you have a falling wedge. You're really sure about this buy order. You're confident that this is going to be a buy order. You try to capitalize on this entry and you say, okay, this is a 1 to 9.5, this is a 1 to 2, and you're trying to take a buy position here, but you're over leveraging or you're using a bigger lot size. This can end up badly. If there is any change in the market structure, you will lose a lot because the sizes you're ordering are very, very huge. Now, money management is key to keep you longer in the field as you get the experience to even make more trades, more good setups, more risk management, more control of your emotion. It takes a long time, so manage your money very well so that you can stay longer in the markets, for you to get enough experience to make money in the market. So thanks for watching, guys. If you haven't subscribed to our channel, please subscribe, hit that notification button, hit the notification bell, and always you'll receive a notification every time we post a new video. Share this video with all your trader friends and help them keep their money until they get enough experience to hit it big, guys. Thanks for watching and keep it up.